the high-yielding bond market alternative stocks have been getting hammered, especially the real estate investment trust, and it's only gotten worse since the election, with the prospect of higher interest rates on the horizon. But what if you want a real estate play, a real one, where you don't need to worry about the bond market competition because it's not a real estate investment trust, it doesn't pay a dividend? I'm talking about CBRE Group, which is symbol CBG. This is the world's leading purveyor of commercial real estate services that also owns some properties of its own. Basically, CBRE helps real estate investors by providing outsourced leasing, sales, appraisal, development, and property management services. The company gets nearly three-quarters of its revenue from these fee-based businesses. That said, the stock's been a bit of a funk lately. It's down 15% year to date. But I think that's in part because CBRE has substantial exposure to the UK, which made it one of the most readily identifiable Brexit victims. We've got to find out more about that. Down here, the stock only trades at 12.5 times next year's numbers. So could CBRE be the safer, smarter way to play commercial real estate in this environment? Today was the company's business outlook day, so let's take a closer look with Bob Salentic. He's the president and CEO of CBRE Group. Get a better sense of how the company's doing, where it's headed. Mr. Salentic, welcome to Mad Money. Good to see you, Bob. Have a seat.
Good to be here,
Thank
Jim.
you.
How are you?
Well, you know, we've been struggling. We like real estate on the show, but we know that the real estate investment trusts have gone down just because there's money flows out of those into yours. You're a pure play. You're about how real estate's doing globally, U.S. How is it doing?
Well, I think real estate's doing well. One of the things I want to comment on, you mentioned our stock price year to date,
yes,
but our earnings are up almost 10% year to date.
I know. Well, this is
there's a discontinuity there.
Right,
yeah.
and that's what we got to drill down on, because I think, first of all, this Brexit thing, I think people looked at a list and they said, oh, who's got British exposure, and they sold. But we've heard many people say that Britain is on fire right now.
Well, what's going on there is there was a big downtick right in the wake of Brexit because people were trying to figure out what was going on. But since then, things have stabilized, and I think the buyers and sellers are sitting there saying this may not be what we thought it was going to be. Right. I'll tell you also, on continental Europe, things have been quite good this year. So the notion that this would spread beyond the UK is, at least in Europe, doesn't appear to be happening right now.
Okay, that's what I thought, because I just felt that things were better there. I'm fascinated by the United States and real estate and our new president. Our new president's from real estate background. Our new president wants to deregulate. To me, that says, you know what, there might be an opportunity, even if interest rates go a little bit higher, for more people to get involved with real estate, for more people to start small businesses, for more people to rent, for people to be able to do projects. These are all good things for your company.
Well, there's several things going on that could be helpful to real estate. Number one, and to our company, if tax rates go down, that's a good thing, right? We're a big taxpayer. And so that'll stimulate not only our company, but other companies. If infrastructure spending goes up, that could be a very good thing for our sector. There are regulation going down. We have a huge amount of business that we do with the financial services industry, both as investors in real estate and as occupiers of real estate. So if regulation goes down and those companies do better, we think that'll be very good for our company and our sector.
There's a lot of M&A activity. What is the impact for CBRE when one of the people have to relocate, change headquarters? What do you make money in those situations?
Well, we serve two kinds of real estate clients.
Okay.
We serve investors in real estate, and we serve occupiers in real estate. So when companies move, we represent them in a number of ways. We can represent them as brokers on the move. We build buildings for them. We manage space for them. So when companies move, that creates a lot of business for us. Right. Obviously, on the side of the investors in real estate, we also handle brokerage work for them. We also handle project management work for them. We do development work for them. So there's the movement of companies from place to place helps our business.
How much of what you're getting are from companies who realize they don't really know as much about real estate and they've been doing it themselves and they should give it to someone else to do a pro?
We outsource a lot of real estate services to big corporations, hospital systems, even government entities. So today at our Investor Outlook Day, we talked about the fact that we think that outsourcing business has about a $140 billion revenue profile. It's about $6 billion of revenue for us today, and we're by far the biggest in the sector. Huge amount of growth there, Jim. We've grown that business for over a decade at a double-digit organic rate. Now, we've had also a lot of M&A activity in that area, but that's been a big grower for us for a long period of time.
All right, you're global. You invest. What countries, what places are the most advantageous, look like the best places to invest in real estate right now?
Well, there's a couple ways we look at that. Part of it is where's the investment activity, and part of it is where is the services activity, right? So where we've actually seen a lot of investment activity this year has been on the continent in Europe. That's where there's been a lot of confidence.
How can that be? Why do we think that Europe's so weak and guest after guest comes on and says Europe's good?
Well, what's going on there now, it's not growing super fast, but it's growing.
Right.
The fundamentals in property there are pretty good. In other words, rental rates are going up, occupancies are going up. People, I think, looked at Brexit and they said this may be more of an opportunity on the continent. So quite a bit of good. If you looked at our third quarter numbers, what you saw was that, relatively speaking, the best part of the world for us was in continental Europe.
Any regions in the U.S. seem interesting to you?
Well, the U.S. is a huge market, and real estate fundamentals are good. This, you know, all this concern about real estate. Here's the facts.
Yeah, give it to me, because people are way too concerned.
The facts are the following: rental rates are going up, occupancies are going up. Unlike any other, I'm almost 35 years in the business. Unlike any other time in the industry for me, any other cycle I've been through, not a lot of new development.
Well, that's what I wanted. The last thing I wanted to ask you was that new building, I don't see a lot of cranes in every city I go to, which means the market's tight, which is good for you.
Yeah, well, it's good for a lot of people. It's good for owners in real estate because you don't have, it's good for financiers of real estate. It's good for service providers like ourselves. We have a healthy market. This has been a slow growth environment, but a long growth environment. And by the way, we think it's going to keep running for a while. Right. That's been a really nice thing for real estate because it hasn't caused overbuilding. It hasn't caused interest rates to spike, and it's caused companies to remain confident that if they do something, that there'll be good results, and they'll be confident that taking space makes sense.
Well, I think they should take advantage of the fact that your stock is down, even though the long-term record of your company is stellar. Just really fantastic. Okay, that's Bob Salente, CEO of CBRE Group. New stock for Mad Money. Consistent grower with a stock that's down right now more than it should be. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.